Now we're going to jump into our next session with Bill Hampton. He's the credit union division executive at FIS. With businesses facing closures and layoffs, consumers are trying to stay healthy and financially afloat during this pandemic. Amid all of this, we want to get to the bottom of what's happening with the payments and processing market and where it will go from here. So, Bill, thanks so much for joining us today.
Oh, Randy, I'm so excited. Thanks for having me.
All right, so let's start with some good news. What's something unique you've seen, from your credit union partners during, or what are they doing to help consumers during this crisis?
Well, first, I'm inspired every day by what I'm seeing and hearing from our credit unions out there, and really, my colleagues here at FIS, my family, the community. It's amazing how challenges really bring out the best in us. But there's been so much. During the kind of midpoint, going back to April, I think when we were all trying to figure out how long this was going to go and what do we do. I mean, the concept of those frontline staff going back into those branches, really demanding to go back into those branches, was the first sign. But there's been more than one instance where I know that executive teams at credit unions were making outbound calls to members, which really just touched me, right? Just checking in. Are you okay? How are things going? And, you think about how long that would take. In several instances, it was hundreds of phone calls were made.
Yeah.
But I think more than anything, it's how they're doing community action and interaction still, and how they've moved that to either video or I tell you, it's not exactly credit union, but I have seen plexiglass artists at work, right?
Right.
I mean, there have been more fabrications of plexiglass installations in the last 8 months than there probably has been in the prior 8 years. But I would think, to answer your question, Randy, it is really just how amazing it is to see the mission press forward, no matter whether it can be in person or a video. The commitment to community and members, again, inspires me.
You're so right. It's there's a lot of negative with news and everything else, but if you stop and look around a little bit, there's some great things happening. You're so right. So we're at a lending conference. We're talking about cards, and cards is lending. So FIS, the world's largest processor, you guys get to see a lot of those trends and some of those transactions. So what trends can you share with us about some of that overall card spending?
Great question. And being frontline, seeing this come in has its blessings and its curses. um, you know, I harken back to the 2008 recession, and what did we see there? What are we seeing here? And obviously, Randy, there's a lot of similarities. A shift from credit. We know we've seen credit transactions fall, in the 22% range. We've seen overall spend declining. It shift to debit, which was expected. We saw that in 2008 as well. I think that consolidation of payment methods has come in there, but overall, one new trend that I don't think we expected to see, and it's not a big one, but go back to remember that cash is still king in this country, especially for transactions under $10, right? I think the average American has 12 cash transactions a month prior to this, but we've seen nearly a third of those. And I say I'm going to be quoting Visa and MasterCard quite a bit here, and FIS data as well, but we've seen a third of that cash spend move to debit cards, which is obviously interesting. But more than that, we've seen debit cards start to participate in what spike we have seen, which is obviously card not present in e-com. And that has accelerated over the last 60 days, which was interesting to us. A lot of these other ones you could expect, but debit making a surge there. And then what's new in this challenge is the cash displacement moving over to debit.
That's incredible. So we know the travel and hospitality sectors have been hit especially hard. Which sectors are experiencing the biggest increases in this?
So I was thinking about this, obviously running a business, and we've got great colleagues here that are dying to get out to see our partners. So, when we at FIS talk about eliminating T&E spend, that's big. Yeah. I looked at these numbers the other day. I mean, airline spend down 80%,
Wow.
hotel 60, 70%. That's massive, right? I mean, that is so much different than what we saw in '08. So obviously those categories, T&E, especially have taken a hit. On the flip side, and I think it makes sense, right? The spend on groceries, the spend on drugs are up. Anything having to do with home improvement is, skyrocketing as
Yeah.
well. Um, I think that the big winner in all this is probably streaming and e-commerce entertainment. I saw a stat on gaming, which has been doubling or has double-digit growth month over
Wow.
month. So, obviously, what we can do while we're locked in our homes has been driving this, but there has been a recovery. And so, the odd thing to me from the last report I saw from the FIS Payments Edge Group was that dining, right, restaurant and dining is making a very, very bullish recovery, and that's a huge credit to the innovation and really, curbside and pick and delivery. But that, I don't know if I have the numbers offhand, but it's double-digit growth in the
It's
last few
amazing.
months in dining. So that's been leading the way in recovery. And I've got an odd one for you. I saw a stat that said that debit card usage for rental cars has had double-digit growth since June, which I don't
Wow.
have a great explanation as to why,
Yeah.
because normally those go hand in hand with hotel and air. But I when I've talked to my credit unions about this, and I've talked to several that are actually still experiencing good interchange now, right? I talked to a large credit union in Midwest yesterday who said that they are almost back on track for interchange. So, you know, um, the categories you would expect are strong, but I think we're starting to see recovery in some of the other ones hard hit. I think the exception to that is really going to be still air, to a certain degree, hotel. I think some of the retail trends are going to rebound, but they're going to shift slightly.
Yeah. Yeah. So maybe just this is kind of a follow up, but a little deeper dive is the credit utilization. What are you seeing in terms of that? Is there any credit being used right now, or is it all debit?
And I think that when I think about the economy, it really does come down to how our members, how the men and women feel about their near term opportunities and their confidence. So I think I know that we're seeing a discipline in spending. People are pulling back that may be less confident in what the next 90 to 120 days bring. So overall, we know that spend is down on credit. Credit line utilization is down as well. And that is definitely a result of overall spend being down and balances. Whether this is tied, Randy, directly to stimulus checks or not, and I think the consensus in the industry is to a certain degree, the pay down of outstanding balances and credit lines over the last 60 days, 90 days perhaps, probably was heavily influenced by stimulus checks. I know that one of the ways that we've been talking about internally, and some of the credit union leaders out there are talking about, that there's an opportunity to become proactive with credit lines. We know that when credit unions proactively manage and do credit line increases in the right opportunities, that does drive utilization up. And I think the credit unions are in a much better position to do that than their bank counterparts, just by the very nature of how they lend. But overall, we have a big dip in utilization of credit lines at this point. Now, I think there's good news here, Randy. I feel that we're sitting on an incubator of small business right now, as so many of these people are at home thinking about how they're going to restart their businesses or start new businesses. So, credit line utilization and credit utilization coming out as we start to rebound, I think is going to be a huge opportunity. And frankly, a great mission call for credit unions to help fuel the lending it's going to bring a small business back.
Yeah. The next one is maybe just my curiosity. So I'm going to ask you to predict a little bit, so I won't hold you to it later. But as these federal stimulus either goes away or it's not there, what happens to those resources, or maybe do they then rely on credit to take the place of that kind of federal stimulus? Do you think?
Well, I think you got a pretty good guess there, and probably as good as mine. And the reason why I say that is even looking back to prior recessions and challenges, what we've seen in 2020, I think holistically has been a collection of new and odd things that that we're reacting to. But the stimulus checks and the employment, unemployment benefits and the paycheck protection, these were all things that I think were a good move, needed to happen. In my opinion, and I think the opinions of a lot of the credit unions that I work with, is that it's somewhat making it a little murky to see what the real situation is. Skip a pays and deferments are
Yeah.
pushing back the problem. However, I think if we see the return to employment and the return to small business speed up, if it can be ahead of that curve where the deferments and the stimulus end, that we've got a chance to grow out of it. Again, another credit union here near where I'm at in the Midwest, and a pretty good sized one, spoke to their CEO yesterday. And, when they looked at the deposit increases that came from stimulus and expected to see those run out, they haven't. So, that tells you a couple things. Maybe not all the right people got the checks, but it also shows that they're saving that and probably getting ready for either some uncertainty in their employment, right? Or again, ramping their own recovery and their families back to normal. So I think they're sitting on it. And your question was simple, and I'm dodging it a little bit. We all fear that we're going to see a spike, right? And charge off and delinquencies when those run out. And I think the key is if we can have a recovery that maybe looks a little more U-shaped or a W. I'm not a finance guy, so I don't know what letter of the alphabet spells what's going to be great for us. But I think as the jobs start to recover, which they have, it's a start, right? If that speeds up, I think we've got a pretty good chance of running this out. But I got to applaud the credit union industry in general for being prepared for this, right? The loan loss reserves seem very healthy to me. The attitudes about putting that aside seem very healthy. But I do think, unfortunately, that we will start seeing some of this come to ground late Q4 into early Q1. And then, you read your own predictions here. You can, depending on the news source you go to, it's either going to be bad or it won't be so bad. But
That's right.
our take at FIS is, and again, because we're so heavily into the merchant side on the payments and the acquirers, we do see a resilience in small business and them starting to get back to work. And so we're gonna look to be optimistic to say that we can try to minimize some of that spike with a return to work and a return to small business.
Excellent. Excellent. So let's pivot a little bit towards fraud. What new forms of fraud are you guys seeing, and maybe something that we should be much more vigilant about right now?
So yeah, there's the really great question. Especially when you think about how do you kind of monitor the risk and the credit worthiness. But you got to hand it to the fraudsters, right? They are as innovative as everybody else. But I saw a really interesting statistic from Visa the other day, and it said that 80% of the fraud attacks from, I believe, June until August were all card not present in e-com.
Wow.
Which makes sense because there's been such a massive spike. But the way they're going about it is a little old school. So you have, you have high velocity bin attacks, right? So they've got botnets out there and auto scripts that are just guessing card information and CVV information. You have, unfortunately, Randy, as we saw in 2008, we have a spike in first person fraud as well, which is symptomatic of people finding themselves in desperate spots and making bad decisions. But I think overall, it's what we've seen. Just think e-com, card not present, and velocity. There's just been so much more of it. ATM cash runoffs. I read an article on that the other day, which, I haven't heard that since, it's been years since I really heard that being a thing. But, what is old is new again, I guess, in the fraud space. But at the end of the day, what we're doing, like a lot of people, is trying to start to use our data. And this is just such a perfect use case for merging the use of data and starting to bring AI and predictive risk modeling. Because in this world where it is all electronic now, or at least 80%, in a card not present world, and the technology is really what's being used against us, AI and predictive script and strong partnering with your processors and with FICO and the bureaus I think are going to keep us in front of it. But boy, think of that, 80% of the fraud went online.
Yeah. Yeah, of course. Matches what's going on, I guess, like you said. So what are one or two tech investments that you'd encourage us to watch the closest?
So I'm always hesitant to say data because, I've been in this for almost 30 years now, and I think we've been talking about data. I think that this has been a tipping point. The use of data has gotten easier, but to your question for tech advances, AI is big, right? It was already big, but this is accelerating that, and I think it aimed at risk management, even asset management to some degree, but predictive AI is going to be big. RPA, robotic process automation. We were into that at FIS at least early. We've seen a huge spike in demand. And that's, Randy, unfortunately, that's going to be a lot about having to look at the expense side of the balance sheet and, what can we do there to do more, but also think about just the manual routine things that need to be done to even combat fraud can be so, I guess, bolstered by RPA. So I think that you're going to see huge strides there. And before we went into this challenge, we were talking to credit unions about the use of RPA and AI inside of the service model, which used to be a little taboo, but there was the big acceptance of it growing. And I was really excited about it because, again, at least here at FIS, we had made huge investments in it. So I'm not excited about anything that's going on here, but it has been a catalyst to some things that really, I think, are going to help credit unions moving forward. But last one, I'll tell you, and I saw this in my own company, and I'm going to tell you it's still a little odd, but digital humans are what it's called. We call ours a digital agent, and we have deployed it in our chargeback call center in the test mode. But this concept of AI and digital representation mixed in with the components we already see in service, I think I'm really interested and pretty excited about opportunities for credit unions there. So, these may not be new, but they are, in our opinion, going to be highly accelerated.
Yeah. This pandemic has accelerated a lot of these technology plays. So, maybe in our last few minutes here, contactless. So there's been a ton of talk about contactless transactions and people driving their decisions based on where they can go and get groceries without having to pull out a card or cash. Are you guys seeing some usage spikes on contactless?
So, great question. Because the thing for you and I and everybody else, it seemed really obvious. But last time I checked, I think we're at 7% adoption in the United States. And if you look at like Europe, I believe it's 47%. I know in Pan Asia, it's in the 70s. We've lagged behind, the world a little bit in that stuff. But think about my earlier comment about cash and the displacement of cash, which isn't a huge thing, but it is a behavioral thing for members, which is always the toughest thing for us to have to try to navigate, right? Is what causes our members to use the channels they use, not use other ones. Think about why cash is being displaced. And for the most part, it's the concept of the hygiene transaction, right? We don't want to touch things and money is dirty. So if we shift from cash to debit like we've seen, but yet I still have to pull out a card and put it in a machine and touch a keypad, I'm not feeling a lot better about that. Historically, the merchants have been the hurdle to get over for contactless, and not that it's a small task to reissue cards that are contactless, but at the end of the day, the merchants are starting to see the value in it, and the merchant processors are working very hard to make it an affordable switch. But Visa has been, pretty outspoken about getting the stats out there around tap to pay and its displacement. So Right now, I think we have 190 million contactless cards in market as of June. We're expecting to have 300 million in the marketplace by the end of the year. So
Wow.
first off, that's amazing.
Yeah.
I think the opportunity for a credit union to make a touch point is huge here because you can roll out contactless. We can start talking about usage and education here. At the end of the day, I think it has accelerated it a great deal. But one thing that we haven't talked about yet that contactless made me think of, but the digital wallet, which has been around for forever, in my opinion, the new battlefield now is all about card on file, right? And how does that card on file operate in that digital wallet? Because if you think about it, we have cards on file for all of, for a lot of the streaming, right? How do you displace that card if it wasn't yours when it was used in the first place? How your phone interacts, right? When you're trying to do any kind of pay, how are those cards on files finding their way to the top? Because I think, and again, I know you asked about contactless, but I think being second card on file, especially during the pandemic, has had a much bigger downside than it might have before. So this is where we've been working with credit unions. And again, it kind of gets back to the use of data about really understanding what your card is doing in the e-com and card not present is where we're working with credit unions to have a big focus. But to your initial question, 9 out of 10 of the major retailers in the United States have already enabled contactless. So that is a great start. There's 200 to 300 new ones every month for face-to-face merchants that are rolling it out. So this, again, a tipping point, a bit of a sad catalyst, if you will, but it is one that I think is going to drive this, where contactless should be where it is everywhere else, which is an everyday event. Tap to pay seems to be the most popular way about going about it.
Yeah, no, that's awesome. Excellent discussion. Dan and I were talking with a credit union recently, and I'm going to try to wrap up, but it's a good point. It's not necessarily top of wallet. It's that Netflix monthly transaction, Uber Eats, DoorDash, those things. So, Bill, thanks so much. Excellent conversation today. Truly, thank you for being here with us.
Hey, Randy, first off, I want to thank you and your staff. Everything that's going on in our movement, right, in the industry, what credit unions are doing is really, I don't want to be overly dramatic here, but it is making such a massive difference. And your organization, you personally, your dedication to leadership through all this, these kind of events that you're holding, the innovation that you're helping drive, it just makes such a huge difference. So I just want to thank you and your staff for the opportunity to just chat. I loved it when we could do this in person. I am equally grateful and happy we got to do it even through video. So just thank you very much for the opportunity.
Absolutely. And likewise, my friend, we will talk to you soon, hopefully in person. And so thanks everyone today, and we'll be back soon. Thanks.